Hello, today is February 27th, 2016. We have some conflicting indicators from Friday's trade. What I'd like to do is go over what happened, review the indicators, and then make a call. Well, we said a few things at Thursday's close. I said it was a perfect place for a gap down with some lower targets. But I said I was concerned because futures were up, and I said if the call failed, it would fail in a large way. If you look at futures, that was certainly true, as we got as high as 1968.75. So as far as the failure happening in a large way, that was certainly true there. I also said gapping up was a sign that these lower price targets would be out of reach, and the only way they could still stay within play is if we moved down right from the open. Well, we did move down right from the open, actually closed in the red. During the day, MEJT said ultimately higher prices would print, which they did. It now says this drop is a false move and gives us a target of 1957.71, most likely to print on Monday. Well, this is a pattern which usually closes near the day's high. When that doesn't happen, it's usually very negative unless we gap over the high when the market reopens. We also have a market that gapped up, dropped all day long, and could not close under the middle of the day low. That's usually positive unless we gap under this low. So based on that, I think Monday we're very likely to have a gap outside of Friday's range. Usually dropping all day Friday carries through until Monday, so for that reason there's a case to be made for the drop being under the lows. We'll come back to that. It's a bit negative as far as I'm concerned that we had all this time to break through this low and were unable to do it, and then once the big money left the table, we went under this low immediately. It tells me there's a good chance that the dumb money was anxious to get out, and that once the smart money was no longer around to provide a cushion, they were able to get us under this low that we couldn't undercut when the smart money was still playing. We do have a 913.9 sell signal from the 65-minute chart. So if we drop, there's a reason for it, but if that fails big. We also have a 913.9 sell signal on the 78-minute chart. Once again, it's negative, but if it fails in a large way. Well, if that were the high, I would expect an impulsive move down. I'm not seeing that here. It looks overlapping and corrective to me. It's not what I would expect to see if that were a high that were going to stick. Also, when the market was dropping on Friday, the percentage of stocks with favorable patterns went up. That certainly is not what I would anticipate seeing if the market were going to be in the tank here. This is a wave count I've seen online. They have wave 2 ending. We have 1, 2, 3, 4, and we're all set to start wave 5 of 3 down. I don't like this count because I can't count this wave 1 as having 5 waves. It looks like a 3-wave structure to me. I think this is a more plausible count, and it certainly I think is more plausible than the one I've been using in the past. If that's wave A, here's B. which is 127.2% of wave A. We have a possible stopping point here at the 50%, but what I'd like to see is to have wave C roughly equal to wave A. And if we have wave C let me get this here. If we have wave C equal to wave A, you get up in the 2050s, you would get wave C of C equal to about 261.8% of wave A of C. You would be hitting the 2054.59 MEJT target, which I still think should print at some time. So for Monday, I look for a gap outside of the day's range. I think the odds favor the gap being over this high. I think the 1957.71 target should print. We could even go up to the 2054.59 MEJT target before the rally ends. But if this counts right, once that rally ends, we're going to have a wave 3 down, which should be brutal. And that is today's call.